earlier this morning, though. Just in overall terms, what's the outlook for the market? Just briefly to kick things off.
It's going to be a difficult day for the market, and that's because we see so many of the heavyweights on the Aussie market trading ex-dividend today, and that includes BHP Billiton, Woodside Petroleum, AMP, Suncorp Metway, just to name a few. So given the number of companies trading without their dividend, it is going to be a difficult day. We have seen the Australian market off to a softer start, down by 0.3%. One area to be watching are the financials, and that's because Fitch late on Friday did come out with some downgrades for the big banks as well as for Macquarie. We saw 3 out of the 4 big 4 banks being downgraded by 1 notch. So that's Westpac, NAB as well as Commonwealth Bank being downgraded by 1 notch to AA- because of their reliance on offshore funding. Now ANZ has remained steady with their rating at AA-, so all of the big 4 banks AA- rated by Fitch. And the other one to watch is Macquarie, downgraded by 2 notches to BBB. So it does look like a little bit of weakness in that financial space today, but coupled with those ex-dividend stocks, it's going to be a negative one for the Aussie.
Caltex with a loss today. The loss is almost, $900 million. What are you making of it?
If we have a look at Caltex's loss, I guess all expected, and they came back out a couple of weeks ago in February and really gave a strong update to the market. And if we have a look at the reason behind that headline loss, it is because of a write-down to its refinery business. And back on the 16th of February, we know that their refinery business has been written down, the book value written down by a massive $1.5 billion, and the carrying value now only at $340 million. And that's really behind the headline loss. Now, that refinery business still undergoing trouble, so probably forecasting a negative EBIT going forward there. And we know that there's a review. The outcome should be known in around about 6 months, but the market probably speculating that we could see a closing down of that refinery business. If we have a look at the underlying profit, or the December guidance, the replacement cost operating profit was $245 to $265 million. It's actually come in on the higher end of that expectation, coming in at $264 million, and with the dividend at 28 cents, pretty much coming smack bang on our expectations. So Caltex's result, while the headline loss does seem quite big, the actual figures were in line with market expectations. So really, we shouldn't see too big a reaction in the shares, considering that the shares are already down 17% in the last year, but have seen considerable support over the last 3 months, up by 11%. So perhaps a little bit of a gain for Caltex, but really no surprises in this.